morning for this Tuesday, March 25th. And the one stock I'm taking a look at today is Quintiles Transitional Holding, whatever. Never really heard of him, but they came up in a scan today, looking for those compressed stocks at a support zone, ready to break out. And as you can see, this stock is trending up, was trending up, right? Kind of in a holding pattern here, kind of like the overall market, even though this is broken down a little bit more, right? So we broke down through this trading range, trading clearly above that 50 exponential, trading above the 200 exponential, and we are getting close to that gray support action zone right in here. As you can see, the market yesterday kind of sold off, or 2 days ago, Friday rather, sold off right here. And then yesterday created that tight little inside pattern, all right? Tight little inside bar. And then today, the market is trading inside of yesterday again. So I'm thinking if the market's able to break up through yesterday's high of 51.73, I think the market could move higher. Of course, if it's not able to break up through the high, then there's no trigger entry. So we'll keep this on our watch list to see what's happening. The E-Mini S&P 500, as you can see, is definitely in a holding pattern. This is definitely ready to break either up or down, right? This is the highest high, all-time high. We came within a point of testing that on Friday and then came down a little off that. So again, we are in a holding pattern here. Waiting for the market to make a decision on where it wants to move, right? So if you're day trading, there's always plenty of opportunities. If you're a swing trader, I think at this point you really have to wait for the market to tell you where it wants to go. Of course, if you're more bullish, that's fine, but anybody looking to put on any type of position in here needs to have their stop either if you're long below this low here, the 14th low. If short, if you're bearish and you don't think the market can move much and you don't think the market's going to break up, then of course your protective catastrophic stop needs to be above the all-time high of 1875 and a quarter or 76 and 3/4. Actually, the all-time high was put in place on the 21st of March, and that's 1876 and 3/4. So again, if you're bearish and you think the market's going to go lower, you absolutely need to have that stop above 1876 and 3/4. And if you're bullish and if you think the market's going to make another move to the upside, then your stop's got to be placed below the 14th low. Okay, let's look at crude oil just real quick. Crude oil doesn't seem to want to move any further. We've got 3 consecutive days now with pretty much equal highs. Look at that. Friday's high, yesterday's high, and so far today's high. Today rejected yesterday's high, and we're trading down off the high considerably. So a big level here. In order for crude oil to move higher, crude oil needs to break up through 129, which was yesterday's high. We went up to 122 today. Again, rejected that level, and we're down to 98.99. All right. So we'll see what happens. Have a profitable day, and I'll be back with you tomorrow. Hope that helps. Bye for now.